Group, growing legacies.
Thanks for joining us on Parlance. This is Bloomberg Quint. I'm Harsha Subramaniam.
Good afternoon. I'm Meera Dugal. Let's get to the headlines. European markets open with losses of more than 1% after US stocks posted their sharpest intraday fall in 8 months.
Back home, markets recover some of the losses posted on opening but continue to trade with cuts of close to 2%.
Indian aviation stocks are bucking the trend to trade in the green after the government cut excise duty on aviation turbine fuel.
TCS is expected to report margins of more than 27% for the first time in 7 quarters when it comes out with its second quarter numbers later today.
And Cyclone Titli makes landfall in Odisha. 2 people have lost their lives. All modes of transport across the state and neighbouring Tamil Nadu have been suspended as a precautionary measure.
You're seeing some sort of recoveries since opening, at least as far as Indian markets are concerned, but the cuts are quite deep. Yatin is here today with a closer look.
Well, Harsha, we have almost, recovered and, claimed half of the losses which were there in the initial gap down. But if you still look at the advance decline ratio on the Nifty, we are 10 advances to almost 40 declines. So, 1:4 is the advance decline ratio. The market breadth is extremely weak, but clearly we have come significantly off day's low. And remember, 10,300 level on the Nifty is quite important level to watch out for according to technical analysts we speak to. Day before also we closed near that mark, and today again we are finding support on that zone. So the market participants are really watching out for that 10,300 level on the Nifty. As far as the gainers are concerned, we have select financial services companies as well as the oil marketing companies gaining in trade. So you have the likes of Yes Bank, HPCL gaining by nearly 7%. IOC and ONGC from the oil and gas pack have been also doing well. What's not working is, some of these BFSI names. So we have the likes of Bajaj, Finserv, India Bull Housing Finance, which have seen almost, 5 to 7% kind of an intraday cut. The metals the metal as a pack also has been quite weak. So we have the likes of Hindalco, Vedanta, all of these stocks witnessing some profit taking. But in the mid-cap space, 2 stocks I would like to mention, Diwan Housing as well as Adani Power. These are the 2 stocks which are maintaining the momentum which was created yesterday. So even after a gap down opening today, we have both of these stocks which have recovered almost 10-15% from the day's low.
Right, Yatin, thanks so much. That's the equity market check. Just checking in on the currency very briefly. The rupee also has recovered from the day's low. 74.45 or so is what you had hit. You have come off those lows. Bunch of factors, of course, continuing to impact the Indian currency. But I think one way that some of the analysts are looking at it is to look at the spot depreciation this year, but also look at the real effective exchange rate depreciation. If the problem was perceived to be an overvalued currency because of the appreciation in the last few years, then analysts are making the case that the depreciation in the real effective exchange rate is relatively modest even now, even though the spot rate has depreciated by more than 14% this year. We had a view coming in from CLSA on that fact, and they are looking at that juxtaposition to say that perhaps the pain in the rupee is not over. The fact that the year-to-date depreciation of the INR in real trade-weighted terms has been so moderate of close to 4% compared with the earlier appreciation of 20% warns that the argument that the INR has fallen far enough that it is starting to look attractive may not hold. On a long run scale, it's the rear that matters for trade flows. The INR is still expensive, said CLSA.
All right, let's move on. And we talk about HDFC Mutual Fund that's looking to have capitalized on lower valuations to increase its holdings in at least select financial stocks. The country's largest fund house bought more stake in State Bank of India and NHPC, just to name a few. That's in the month of September. Jayesh is here to take us through some of those portfolio changes made last month.
Harsha, some smart changes done by HDFC Mutual Fund in the last month, especially on the way down. If we have a look at where they have actually increased stakes, some of the names that you were mentioning, PFC, NHPC and HPCL, this would have actually hurt. But NHPC is in line with the utilities trend that we have also been seeing from ICICI Prudential Mutual Fund as well. And we have Chambal Fertilizer and SBI where they have increased their exposure towards. But it's the interesting bit is from where they have have decreased pace, and focus on the bottom three names that we have, all from the large cap space: Infosys, ICICI Bank, and HDFC. Remember, Infosys, from the IT pack, they have reduced about 32 lakh shares. This is the interesting one, given the fact that IT has been the sole outperformer this year as well. So, maybe some bit of early emergence of trend that the rally could be stalling over here. But if you have a look at where they have bought afresh and sold completely, not much in terms of where they have bought afresh. Adani Enterprises, they picked up about 16 odd lakh shares, Gujarat Fluorocarbon 4 lakh shares, and MRPL Pidilite some small change for HDFC Mutual Fund. Where they have actually sold stake is a couple of small banking names like DCB and Andhra Bank. Jet Airways goes completely out of their portfolio, as does Godrej Agrovet and Repco Home Finance. But the real key takeaway is where they have actually decreased their stake in select banking and IT names.
All right, thanks so much for that. Let's move on to individual stock-specific news. Airlines are gaining in trade today after the government cut excise duty on aviation fuel last night. The 3% cut provides some relief to these companies, which are already grappling with pricing pressures and a weaker rupee as well. Samit Sarkar is standing by to tell us what this means for the carriers. Samit.
So if you see, Government of India has lowered the excise duty that has been charged on the aviation turbine fuel prices to around 11% from the earlier charged rate of around 14%. Now this move was not anticipated, especially after the government had introduced custom duty on the imported ATF. Now this move would bring in some relief to the aviation sector, which has been reeling under the pressure of lower ticket prices, weaker rupee and higher crude prices so far in 2018. Now if you see the new tax structure, it will be around 11% excise duty charged on the domestic routes plus the state tag, a state VAT, which varies between 20 to 30%. For Udan and regional routes, the center taxes are different. It's close to 2% excise duty charged for the Udan routes, and state VAT for regional and Udan routes is in the range of around 1 to 4%. And for international routes, there is no taxes charged. So as you see, tax rates are higher for domestic routes, and the company which has more domestic routes will benefit from this move, and that will be Indigo. If you see, Indigo has deployed nearly 85% of the total capacity on the domestic route, and this is followed by SpiceJet, which has around 70% of its capacity deployed on the domestic routes, and then Jet Group, which has around 36% of its capacity on the domestic routes. Now if you see the fuel cost per seat kilometer that the airline companies incurred in the first quarter of financial year 2018, it was in the range of around 1.5 rupees to 1.6 rupees per kilometer. Now this would have been lower by around 2.6% for Indigo if this new tax rate would have been applicable in the first quarter, while for SpiceJet and Jet Airways it would have been lower by around 1.9% and 1.3% respectively. So not much financially, but sentimentally it is a very positive move for the aviation companies. And post this announcement, Indian Oil Corporation also lowered the ATF prices by around 2,000 rupees per kilometer across the 4 major cities in India, that is Delhi, Kolkata, Chennai and Mumbai.
Sumit, thank you for that. Interesting news flashing on your screen. The Delhi High Court has ordered 17 crores to be paid by the Singh brothers to Daiichi. We'll try and get you more details on this one. Shivinder Singh, the news says, has offered to pay his share of dues. But let's move on now and talk about earnings. TCS will be coming out with numbers later today. They have continued to be on a steady growth trajectory in the second quarter. Analysts are expecting the technology services giant to report good set of numbers today. Darshan is standing by to tell us what they're pricing in.
Yeah, so basically this time around they have the currency tailwind with them, and that is why margins will be over 26% for the first time in the past 7 quarters. Dollar revenue, we are seeing growth of 2.8% quarter on quarter because of the currency tailwinds and how it's appreciated. The rupee revenue will be up 6%. EBIT will be up 10%, and EBITDA margins over 26%. Profit growth of 8%. Basically, the EBIT margin target is anywhere between 26 to 28% by the street. And the last time they did EBIT margins in over excess of 26% was in the third quarter of FY17. So it's been a while. Now, the dollar has strengthened 6.5% against the rupee, and every 1% strength that the dollar gets in means that the EBIT margin goes up by anywhere between 20 to 25 basis points. So that's on the margin front. The rupee tailwind will also help the revenues for the company. Management has shown out confidence as far as their revenue outlook is concerned. BFSI and America, both of them globally, there has been improvement, so that is something that will help them. Deal wins are something that has happened, and large deals have been closed with a lot of potential clients that were there, so that has been closed, so that is good for them. What to watch out for? What's the visibility on the BFSI and the North American markets? That's something that we need to watch out for. Consistency in retail and manufacturing vertical, and what are the deal sizes and tie-ups that they're looking at in the foreseeable future.
All right, thanks so much for that. Let's move on to global news. The Fed rate hike was a mistake. That's according to US President Donald Trump, a day after he expressed his liking for a low interest rate regime. Trump called the Federal Reserve crazy for sticking to its rate trajectory. Listen in.
I think the Fed is making a mistake. They're so tight. I think the Fed has gone crazy. So you could say that, well, that's a lot of safety, actually, and it is a lot of safety, and it gives you a lot of margin. But I think the Fed has gone crazy.
Mincing no words, President Trump there. Let's move on. Former Fed Governor Randy Kroszner has said that Fed has been extremely clear about its intent, about its gradual rate increases, and that it can't be held responsible for the sell-off in the US markets. While talking to Bloomberg's Haslinda Amin on the sidelines of the IMF World Bank meetings in Bali, Kroszner called out a general pullback. Listen in.
I don't think the Fed surprised anyone. They've been telegraphing their rate path very, very clearly, that it's a gradual one. There was no new information that came out about the Fed. I mean, if the markets just suddenly got it, that's, I think, the market's issue. The Fed has been very clear. I don't think it's only that. We've seen a lot of movement, especially in tech stocks, and I think there's been a lot of excitement about particular sectors, and there was a general pullback.
The Fed has also been clear that it's only looking at the U.S. economy, but there have been rising or, louder voices from outside the U.S. asking for the Fed to be mindful of its actions. Case in point, Indonesia, the finance minister saying,
Sure.
You know what, there are implications for the rest of us. Should the Fed consider the outside world? It is an interdependent world.
Of course, and the Fed has an outsized influence on the world, and it does in the sense that it considers how its impact on the rest of the world then affects the U.S. But the U.S. Fed, like every central bank, is created by its domestic politics and the domestic Congress, and so the focus has to be primarily on domestic issues. But during the financial crisis, for example, there's a lot of coordination among central banks. Actually, at these meetings back in 2008, when I was there was a lot of coordination. We did coordinated rate cuts and such. So there can be cooperation, but always the primary focus has to be on the domestic issues for all central banks.
Can there be greater coordination this time around with this Fed? Do you see that happening?
Well, I don't see that we're facing a global crisis as we did in 2008. So in those extreme circumstances, central banks can work together. They did dollar swaps with a number of central banks. And so in those circumstances, they can. I think right now we're pretty far from that.
That's a view of a former Fed governor, sort of defending what the current Fed is currently doing. What's the impact on the market, and is this global sell-off likely to continue? Let's welcome in Harry Colvin, Director and Senior Market Strategist at Longview Economics. He joins us from our studios in London. Harry, thank you so much for joining us today. We've seen overnight US stocks getting hammered, and that, in a sense, having a ripple effect on Asian markets and now on Europe. Is this a beginning of a long correction in store?
Yeah, I think this is the beginning of a significant correction in markets. I would say it's probably a 10 to 15% sell-off in the S&P 500 and more so in the higher beta indices in the US and elsewhere. And really this is about, there are the three types of sell-offs in markets. There's a sell-off because there's an unwinding of long positioning and euphoria, and it's a risk event. There's a sell-off in anticipation of a recession. And then there's the type of sell-off we're seeing now, which I think is the impact of tightening dollar liquidity in the world. Clearly, the weaker hands in the global economy and global markets are most sensitive to that, and they've moved lower first. And now we're beginning to see that tightening showing up in the US economy and indeed in US markets.
We are at the start of the correction, so no way to know whether this would impact policy making or the thinking of the Fed at all. But should we see the markets remain nervous? The Fed does tend to take into sort of address some of these market concerns. Do you think it would get to that the rate hike trajectory would get delayed at all?
Well, I think if the sell-off in equity markets is big enough and if it spreads into other asset prices, and in particular if we see a widening of credit spreads and we see a tightening of financial market conditions spilling over into credit conditions in the banking system, then I think we're into an environment in which the Fed probably ease off. And in many ways, we're already seeing some of that. If you look at growth in commercial bank assets, in real terms, it's fallen to zero. Money supply growth in the US banking system in real terms is close to zero. In nominal, it's fallen very sharply. Bank lending rates have gone up very significantly. So we're already beginning to see a little bit of tightening, and that is the kind of thing the Fed would potentially be responding to.
One of the prime levers of the market rallying in the first place, Harry, was the US tech stocks. You haven't really seen a significant correction taking place there. Is that likely to happen, and is that likely to accentuate what we are seeing currently?
Yeah, and let's not forget, tech stocks performed pretty poorly relative to other parts of the market yesterday, and other large cap stocks, and NASDAQ was down significantly more than the S&P. And yes, I think the high beta equities should lead the weakness in markets, and probably lead a little bit of a relief rally as well, I would have thought. There may be a bit of sector rotation. I think it's a difficult call, but certainly tech stocks are the sexy place to be. There's a lot of crowded longs, and potentially that unwinds and drives tech and the broader market lower.
What kind of ramifications is this likely to have in emerging markets, Harry? Do you see a prolonged sort of impact, particularly on emerging markets like India?
Yes, I think the point about this type of sell-off is that it's in response to a tightening of global dollar liquidity. And we're seeing central banks around the world, like India, but particularly Brazil and China and others, have been drawing down their foreign exchange reserves, and they've been doing it to defend their currencies, buy back their own currency to defend weakness. And the impact of that is a slowing or even a shrinking of commercial bank balance sheets in those EM economies, and that's causing a tightening of financial conditions in emerging markets. So there's a genuine fundamental problem about dollar liquidity and a stronger dollar that's impacting these economies, and clearly it's showing up in these markets. So this is not just a risk event that quickly reverses. This is an issue, and we tend to get these issues every few years, whether it's the Eurozone crisis, whether it's the 2015-16 speed bump in the global economy, whether it's the Asian crisis. They're all really driven by the same thing, which is tighter Fed policy. Now, how bad it gets, I think, is difficult. It's a question of degree, and it depends somewhat on how quickly the Fed respond, how quickly they begin to change their language, and other things like that. But I think we're into a 2015-16 type scenario. It's not a February-March risk event. This is to do with dollar liquidity tightening up.
Harry, if the issue is tighter dollar liquidity, one could have argued that some of the speculative money on commodities, oil in particular, which matters most to us in emerging markets, would come off. Oil prices would decline. We saw some of that last night. But the broader problem on the oil side is also this Iran issue. So even if we see risk aversion, money coming off the table, oil may not correct to the extent that it would have in normal times?
Well, oil is highly correlated with, or can be highly correlated with, equities. There's an oil equity beta story here. Oil generally goes down in waves of risk aversion in global markets. And let's not forget, you look at the oil curve. It's backwardated. We're all priced for weaker production out of Iran, weaker production out of Venezuela. These are long-term problems, and I think they support a long-term uptrend in the oil price. But it's clear that in the near term, there's plenty of complacency around. Sentiment is quite bullish. A lot of our oil technical indicators are back at sell levels now. So I wouldn't be surprised if we see a little bit of near-term weakness in oil. Perhaps it goes down $10, something like that on Brent, and I think that would be a good buying opportunity for oil. Harry, we leave it there. Many thanks to you for joining us with your perspective. Harry Coleman joining us from London.
Other banks may take a cue from State Bank of India and hike their loan purchases, said a government official. The official added that a strategy is in place to deal with the rupee weakness and current account deficit. Nikunj Ori now joins us on the phone line with more details on this one. Nikunj, what do we know?
So according to a senior government official, more banks other than SBI may look at portfolio purchases from NBFCs in an effort to help the sector to tide over the liquidity crisis. According to the official, it is a good opportunity for banks to expand their portfolios as these assets of NBFCs are secured. Remember, recently SBI had announced the purchase of assets worth 45,000 crores from NBFCs which are currently facing a liquidity crisis or a crunch. Over to you.
All right, Nikunj, what were the other important messages to take away from this briefing?
Firstly, on the current account deficit, the official said that there are a lot of measures in place that the government will take going forward. However, he did not share the measures that the government is going to take. And also on one of the options to tackle the weakening rupee could be NRI deposit scheme. When it's going to happen is not certain or clear right now. Besides that, the official also said that RBI has better reserves as compared to 2013 to tackle the current widening of current account deficit and balance of payments.
All right, Nikunj, thanks so much for giving us that update. The government fighting fires on many different fronts. Cyclone Titli has made landfall near Gopalpur district in Odisha around 6:30 a.m. today. The very severe storm uprooted trees, electric poles and damaged hutments as it progressed through the coastal areas. The cyclone also triggered heavy rainfall in at least 3 districts and caused minor damage to power and communication. The storm has killed 2 in Andhra Pradesh. However, no casualties have been reported in Odisha so far.
The erratic rains of India's monsoon determine the nation's fate for the rest of the year. When there's too much rain, floods cause landslide and wash crops away. Hundreds of people die each year when there's too little as well. Families go hungry and there's shortage of power. This year's monsoons brought both too much and too little rain, depending on the region, that is. Atul Prakash of Bloomberg News joins us with a snapshot of the distribution pattern. Atul, thank you so much for joining in. There have been extreme weather patterns that we witnessed this year. What's been the ramifications? What are the crops that have been affected this time, and how severely have they been hurt?
Yeah, this year it was a very typical year in terms of monsoon, because we have seen the kind of very extremes on the both fronts. One side we have seen kind of floods in Kerala, where almost 500 people have died, and on the other side in Gujarat there are a kind of drought-like situation which is affecting crops. Main crops which were affected this year because of floods in Kerala, we have seen rubber plantation getting damaged, and there is going to be a severe drop in output. It's going to be almost 21-year low. Also in Karnataka, because of kind of deficient rains, and in some parts of Karnataka, heavy rains, we are having impact on coffee output. At the same time, in Gujarat, which is a major cotton belt, we have got very little rain, and the cotton crop is going to be affected. And India is the biggest producer of cotton in the world. So a poor monsoon in the main cotton belt means that international prices are going to be affected. India is going to probably import more, and that is going to have an impact on global prices.
Atul, we'll leave it there. Thank you so much indeed for joining us with that.
The rising trade tensions don't worry Microsoft CEO Satya Nadella. Just speaking to Bloomberg, he says that the outcome of globalization, with each country looking to draw up a plan to safeguard its own interests, what this creates is new opportunities for Microsoft. Listen in.
I think about people and institutions people build to outlast them, and I think about this globally. That's the 3 key things that we always think about when we say empowerment and empowering. You know, being an American company, in fact, I always say that we are a multinational company that is an American company. So we are fundamentally dependent on and also proud of the American values and the trust in American institutions and values that the world has. And so clearly, that has served us well, and quite frankly, even today, I think they serve us very well, because I think our form of government, our form of democracy, with all of the debate we have, our ability to be able to set an example for what is a place where a lot of people of diverse backgrounds can come together, have a debate, and move and make progress, I think is what makes America unique, and us being born in that culture is what gives us credibility. And of course, we can't take any of this for granted, either as a nation or as a company, and we have to earn it every day. And somebody described trust is this formula, which is it's about having values that are consistently applied every day or over time, and that's what engenders trust.
Are the trade tensions affecting your business, though, do you think?
In trade tensions, I think we're going through this phase where everybody has recognized that, let's call it the phase of globalization, has not created equitable growth in all parts of the world or in any country to all parts of the society. So every country is re-looking at what are their relations around trade that help them thrive, because that's key. I mean, I think every country will put their country's interests first and look at what makes more sense. And what is it that's our responsibility as a multinational company is to sort of say, what are we contributing in each country? How are we making small businesses more productive, or public sector more efficient, or multinationals in that community country more competitive? If we do that, we're good. If we don't, we have a challenge, because I think long-term stability for us comes from our ability to create more surplus and more opportunity outside of what we do.
Satya Nadella of Microsoft. Out of time on the show. Thank you so much for joining us.
Lots more coming up on Bloomberg Quint.